Hey everybody. So I'm going to go ahead and jump into things. Want to thank BAE Solutions as our sponsor for today. They provide the grant that allows us to be able to have this program every year, and in particular the one that has the first 20 people being able to get it at half price, which is what will continue into next year. Want to thank Morgan, of course, for doing this and being our presenter for today. And this is the one event towards the end of our year where usually I'm like, hey, this is what's coming up. And right now, what's coming up is 2026. So get ready for all of the chamber website is going to be updated. That way, when you arrive at the annual dinner, you will be able to register for all of next year's events. Or if you want to wait until you have not had a drink to register for all of the events, it'll be ready the following Monday as well. So thanks everybody for being here. Wanted real quick just go around the room, kind of introduce ourselves, talk a little bit about why we're here, and just one or two sentences. And then when we get back to Morgan, we will dive on in. So I will start. I'm actually going to start with Robert because he's not looking at me. Oh, solitaire? Nice. But I'll kick it over to you to start.
And you would like me to just introduce myself and say why I'm here?
Why you're here.
Okay, my name is Robert Carrington. I'm a financial advisor. One of the reasons I'm here is Morgan and I have worked closely together throughout the year, and just the better I understand her business, the better I can refer her out to other businesses. And to see if there's any tips or tricks that I could pick up for myself.
I'm Becca Rainey. I own Original Frameworks over in Blacksburg. I'm here because I am a client of Morgan's, maybe former client, maybe current client, but she has terrific knowledge and resources, and financial literacy is certainly not my strength, so this is all good.
So my name is Noah Davis with Otis Insurance Solutions. I'm here to support Morgan because she just needs our support on this presentation. No, she's great. She's been able to talk. We've been able to do a couple one-on-ones together. And I know she actually does really good stuff for all of her clients. So just coming out here today to support.
Anita Lilly, and I wear a couple hats in the community. I work part-time for Indianapolis Fine Jewelry, and I'm also a volunteer on the board at a nonprofit that keeps downtown Christiansburg. So it's always good to learn what's applicable to the year-end that I can utilize across the board and take back the information. And thank you, Morgan, for presenting to us.
I'm Brian Williams. I'm the operations manager at Ewing Construction and Cabinetry in Blacksburg. I'm here. I'm always open to learning new things. And this is a great time of the year to start planning, which seems like this is the topic. So we're doing that within our business, getting ready for 2026. So this seems like a good lunch and learn to come to. So.
I'm Kristen Gallagher. I'm the K in MK Leadership. It's a consulting firm out of Blacksburg that focuses on leadership development as an individual. I'm here with Nita. I wear multiple hats. We also do real estate investing. And so when I saw this workshop, I thought this would be a great opportunity to learn more about financial literacy and how we can be better with all of the businesses that we're juggling. And I don't know more about it, so I'm excited to be here. Nice to meet you.
Thank you. Thank you all for coming. I will warn you, I talk with my hands, and whoever is listening might get hit a couple of times. Just a little bit about me and my business. I graduated from Christiansburg High School, went to Radford University, went to New River, also went to Liberty University, and have been in the community in different roles, everything from working as a special educator all the way to an operations manager at a local landscaping company, and then a GM at a military sewing factory in Salem. So a wide array of things. What my company does, we look at operations and process optimization. We help with financial systems and support, whether that's bookkeeping or just getting you a system updated, like QuickBooks, going ahead and putting that in for somebody, especially small businesses. And then also business strategy and advising. One of the big things that I noticed when I went into my own business was just there's a lot of awesome business owners who know their craft really, really well. And then you get to the point when it looks at the business side of things, and financial literacy was one of the key pieces that, people know how to do what they're good at. If they weren't super strong at the financial literacy, being able to come on board and help them understand what they're doing and know what they're doing to make better decisions. Let's talk about what we are going to cover today. So there's this whole mantra, like I said, you're great at work, but you're drowning in your business problem. You don't understand if your pricing is correct. You feel like you're making money, but then when you look in your bank account, it might not look like it. Or you're making money, but you can't figure out where it's seeping from. Like this says you're working harder than ever, but you aren't seeing it reflected. What financial literacy gives you? So confidence in your pricing, so you don't have to worry, are you charging enough for what you're doing? You will know. Control over your money, so you'll be able to direct it instead of just like reactively paying a bill that comes your way, knowing exactly what that dollar is being utilized for. Clarity on what's working, so to know which services are profitable or which type of retail products are profitable, and which clients are the clients that you really want to work with. Peace of mind, so knowing that your business is sustainable and not just busy, because we all, I think, are busy people. And sometimes it's like, am I busy because I'm busy, or am I busy because this is helpful to a customer or a client? And then the ability to grow strategically. So making smart decisions on when to hire, when to raise prices, when to invest, or when to just make changes. So some scary things and some uncomfortable things. The reality of it is 50% of small businesses close and fail within the first 5 years of being open. The number one reason for that is poor financial management. Not bad products, not lack of customers, but not understanding the money or not being able to redirect it and catch it quick enough. And then 82% of small business owners say they struggle with cash flow. And it may not be that they don't have money coming in and going out the way they want to, but understanding where it's going. So the good news is financial literacy is something anybody can learn. We're not learning calculus today. You don't need to be a numbers person to be successful. There's tools that you can put in place and things that you can do on a regular basis that can give you that confidence. And then small changes create big results. So sometimes just being aware and taking a review every now and then of one specific thing will help you learn more about what you're doing. So what we're going to learn about, we're going to understand our financial story a little bit better. We're going to understand how to price our services strategically, conduct a year-end financial review, and then build a realistic 2026 budget. How many of you have your 2026 budget finished? That's okay. So by the end, my big goals, by the end is that you all understand your numbers better. If you're pricing correctly, we have that year-end review checklist, and then we can leave with a budget framework. So we're probably not going to come out with a budget unless you've got access to everything really, really quick and you're really good at that. But we will leave with a framework. So anybody that knows me, the ones that are in my case group or that know me outside of here, I am completely transparent. That's what makes me feel like that I can have you be transparent back with me. So what the presentation is, this is practical strategies that you can implement easily. And it's based on real businesses and real numbers. Judgment free. We all make mistakes. That is a big thing when I work with businesses. If I go in there, I want them to know that I'm not going to judge them because we can't fix things if they feel like they can't be honest and open with me. And it's interactive. So think about your numbers in the process if you know them, or write down your notes of like, I don't know that information, but I should dig into this later. And it's supportive. Questions are not only welcome, but encouraged. So just raise your hand if you've got a question and a slide, and we'll stop and chat about it. It's not tax advice. I'm not a CPA, and you should consult yours for any tax strategy. If you don't have a CPA, we can chat about that later. With budgeting and financial literacy, you will learn that not everything is one size fits all. So if we talk about something and you're like, that really doesn't apply to me, it may not. We just need to look at it in a different light. I tried really hard not to put a bunch of financial jargon in there. It's really the basics of it. And what financial jargon is there, it is explained. It's not theoretical, and everything I share comes from working, again, with real businesses and business owners just like you all. Some of what I might share may make you uncomfortable because looking at our numbers, honestly, can be a little bit difficult. You might realize when we're walking through the pricing that maybe you're undercharging, maybe you're severely overcharging, and you might see expenses that, when you think about them, you're like, I shouldn't have spent that money there. I should have spent it here. It's okay. It's normal. Everybody, it's a learning. Business is such a learning experience. Whether it's the very beginning of your business or you're 30 years in, there's still something that you can learn. So understanding your business finances. So income, it's more than just money coming in. It seems simple, money coming in, income, that's easy, right? But there's a little bit more in depth to it. So gross revenue is a term that you'll hear and that you will see on any of your business's profit and loss reports. Okay, that is the total money that came in the door. What it tells you is your market reach and how effective that you are at sales. And the common mistake that people have is thinking this is what I made. I had a client who thought they made $120,000 last year, and when we looked closer, yes, they had $120,000 come in the door, but then they had refunds and discounts, and so their actual revenue was about $105,000. And so when you look at that, that's $15,000 less to plan with. Okay, net revenue, what you keep after your refunds, discounts, returns, and all of those things. This tells you your actual selling power, right? So if you come in and you have sold a lot and you've had a lot of money come in the door, but you have to push it right back out, you didn't make that money. The big red flag here is if your gross and net income have a big gap, we might need to look at pricing and delivery. So delivery is not necessarily like UPS shipment coming to the door, but your delivery to your client and whatever that looks like. Another big thing to think about is recurring versus one-time revenue. So recurring charges could be something like a retainer. I currently actually do both of these things depending on the customer. A lot of businesses are that way. Retainers, subscriptions, ongoing contracts. So for me, that's predictable work. I know that work is coming in, and pretty much any month I can sit down and create a schedule and find my holes to plug in project work or one-time work. So that's like project fees, one-off services. For some businesses, it can be feast or famine. For other businesses, it can be seasonal, right? You're not going to see a landscape crew putting down sod in December. The goal is ultimately in most businesses to balance that recurring revenue and one-time revenue. Some businesses are comfortable with like a 60-40 split. Other service industry businesses, you might see something like a 70-30. It's kind of unique to a business. Yes, sir.
This might be answered later on, but with the reoccurring and one-time, do you have a framework of trying to determine how much it's costing us to get those clients?
Like new clients versus
new clients
old
versus retaining?
I don't in here, but it's something that I can work with you on individually. So I want you to think last month about your biggest income source in your business, and was that recurring or one time? If everything is one time, you're going to be on like what we like to call the revenue roller coaster, right? And that's where seasonal things hit hard. If you have a seasonal business and everything is one time, then I would suggest like, how do we figure out how to get somebody coming back to your business to kind of boost so you're not all relying on that. It helps us build more predictability too. Expenses. I think this is the fun part, but most business owners don't think this is the fun part. So 3 buckets that every business owner needs. We have expenses, right? So we have our cost of goods sold. These are direct cost. This is money that you spend only when you make a sale. Materials to finish a job, software specific to a project, a subcontractor, right? And I'm not sure if you all use subs, but if you have a subcontractor, that would go under your COGS for that project. This helps determine our gross profit. Okay. Operating expense. So this is what is called overhead. And many times you've probably heard that term. It is the money that you're going to spend whether you make a sale or not. That's like your salaries, your rent, insurance, utilities, subscriptions, which we're going to talk about a little bit later, and then like general software. So yes, like your accounting softwares, QuickBooks, things like that. In the landscaping industry, we used LMN, which was lawn maintenance networking, any kind of production software to help you. Why that matters. So this is actually what you would consider your break-even number. And that is what you would have to bring in every single month to just cover the business to keep it going. Okay. Sometimes you will see an owner, if it gets really fuzzy, this salary goes away, but our goal is that that doesn't have to happen for you all. And then discretional and growth spending. That's my favorite category. Money that you invest to grow. So things like marketing, professional development, networking events, new equipment. And that's where you get to control your growth trajectory. So that's why I love that one. I said we were going to talk about subscriptions. So there are several traps of expenses. So the subscription creep. How many of you pay for a subscription that you haven't used in several months? Yeah, me too. But about a $29 a month tool that you forget about, that's almost $350 a year that you could put into something that you would use. Or hey, give an employee a bonus, right? Most business owners have about 3 to 5 that they pay for that they don't actually use, or they don't actually use fully. Miscategorized owner's compensation. So what happens is you are paying yourself a salary and you get to the end of the year and you're like, yes, I made $30,000. I'm going to put that in my pocket, right? Well, you actually have to pay that to yourself. You can't just put that in your pocket. And then what happens when you pay yourself? Then that means you have 0 profit, right? So that profit is what you ideally would put back into your business to help, or just keep in the bank for next year to fund next year's projects. If you take it all out, well, you're going to have to do some sales really quickly on January 1st. And then hidden cost. So this one is big, and this is the hard one to admit to, but this is your time, right? So if you are doing admin or basic tasks that are something that an employee can do for you, or a professional that can do for you much quicker, say you are doing like a $15 an hour task, like answering the phone and scheduling an appointment, but you can bill $150 an hour for your services, then you've got a major offset there, right? So we are not making that money that we could be making by a billable job or a billable task. Those free tasks that you are doing to save money from hiring a professional or from hiring an admin assistant actually cost you quite a bit. When we get into the year-end section, we'll talk about these a little bit more. Profit and loss and what it really means. So we'll walk through this example together. So this company brought in $100,000. I used nice round numbers so that it would hopefully make sense. And then the COGS were about $40,000 worth of cost of goods sold expenses. And so our gross profit is $60,000. One way I know, or I think about them, is it's gross to know that if I didn't have to worry about the business, I could have actually made $60,000. But everything I catch in my net, unfortunately, after operating expenses is about $15,000 because I've got to run my business. And right now that's costing me about $45,000. This isn't my business, but you'll hear me talk as if a lot of these businesses are mine. What do these numbers tell you? So Our gross profit margin is going to be your revenue minus your COGS, which will give you this gross profit divided by your revenue again. So right now this one is about 60%, which is pretty good. If you want to talk specific to your industries, I've got some like charts and things that we can talk about, whether that's consulting or construction or a retail space. But a 60% gross profit's pretty good. And then we get down to the net profit margin, and that's your net profit. So this 15% minus or divided by your revenue. And so the 15% here. That's actually pretty healthy for a small business. Small businesses generally are about 10 to 20% on profit revenue to start out once they start flipping over into the green. The critical thing here is profit is what's on paper and cash flow is what's in your bank account. You can be profitable and still broke. Okay? Again, cash flow is not profit. Cash flow is the money going in and out of your business. So, and you'll see in most accounting softwares that there are two different reports. There is a profit and loss statement and a statement of cash flows. Knowing what goes in and out of your bank account is great. It is great to know that information. And keep an eyeball on it. Again, you can be profitable and broke. And you can also have cash rolling in, and then also it's just sneaking right back out. Some cash flow red flags. So if you are having to go get a check from a client and you've got to run it to the bank before a check clears that you wrote a bill for a bill, that's a little bit of a red flag. You have profit on paper, so looking at your P&L, you should be having at the bottom and that net profit, you should be making money. But then when you look at your bank account, there's nothing in there, or there's not what you expect to be in there. That's kind of a red flag. One of which sometimes can happen is the payment terms with clients are 60 plus days. Now that may not be because you wanted them to be, but that may be what your client pays you at. I think anytime that you've been in business, you probably have that client that doesn't quite like to pay right when the bill is due. And that's okay sometimes, especially if you've got a great working relationship with them. But if you've got bills coming in that you have to pay, then you might have to stick with that client a little bit harder and be like, hey, can you please pay your bill? Can you please pay your bill? Those are never fun to have. Conversations to have. But then there's also using credit cards for operating expenses. Now, I'm not saying that you shouldn't use a credit card for operating expenses, but when you are relying on that because you don't have money in the bank, that's a red flag. This is also why it's really important to look at both your profit and loss and your cash flow. They tell different stories, and you need to know both of them. So here is a real life example here of income. This person does client services and speaking. They use software specific to clients for what they do. They have subcontractors that come in and work. They've got a pretty gnarly 78% profit margin, which is great. Healthy service business is what that would tell you just in a really quick look. And then their operating expenses. So the owner's compensation, office and supplies, marketing, insurance, all of that good stuff totals out to be about $95,000 in operating expense, and their net profit margin is $30,000. 19% is pretty awesome. But look at that office supplies category compared to what the owner's making. That's a fifth of what the owner is making, right? That $12,000 is about 7.5% of the revenue. And so my first glance at that is, where's that money going? What are we paying for in office and supplies? Marketing, on the other hand, is $3,000. So I'm really shocked they're pulling in this kind of money without major marketing, right? Their marketing is only 2% of their revenue. Most growing businesses look at about 5 to 10% of marketing cost of their revenue. So that's something to think about when we move forward. And then the net profit, like I said, is pretty sweet. $30,000, 19%. But then is that going back to the owner? Is it staying in the business? It's fine if some of it goes back to the owner. It's fine if all of it goes back to the owner, if that's what's right for your business. But making sure we know where that really ends up. Questions to ask. Speaking of, questions that when you look at these reports and things that you should know. Am I making enough money? Right, that seems like a really easy question. But is there profit left after all the expenses? Where is my money going? Can all of you name your top 5 expenses off the top of your head? I can most days. And then what can I change? And this is something that you should ask yourself all the time. Change is not bad, especially when it comes to money. Right? If we are doing something and it's not working, then let's change it. Right? And if you can't answer these 3 questions right now on things, then you have homework, immediate homework. You don't even get to the end to do homework. I want you to pull your profit and loss statement and actually look at it. It is a-okay if you look at it and you're like, this makes absolutely no sense. What does that tell you? Then we just need to look at it a little bit further, figure out where things are. If you're in like a QuickBooks or a Sage, you can literally click on a line item and it'll blow it up and give you what that expense is that looks so weird, or what that income is that looks so weird. I promise when you look at that P&L, it's going to be less scary than you think it is. So now that we kind of understand some of the terms and things, let's talk about pricing structures that work. And I'm going to split this into 2 different segments, one about service businesses and then one about a little bit of retail space, because I know there's both here. How many of you chose what you charge based off of your competitors? How many of you worry that you're undercharging, but you're scared to raise your prices? So you're not alone. Pricing is one of the hardest things to talk about, and it's something that as a consultant that goes in with businesses, it's easy for me to be like, you're not charging enough, right? But when you have clients that you love and you have people coming into your business all the time, you want to make sure you're capturing the right business. So you don't want to overcharge on those right customers. So for service businesses, there's several ways of doing it. I talked about it a little bit before on the one-time and recurring, and these are just different views. So hourly pricing, tracking the time and bill it by the hour. That works for some new businesses. It works for like variable scope. So if you are not quite sure what you're getting into, maybe you should charge hourly, or industries where it's standard, right? Project-based and flat fee pricing, that is one price for a defined deliverable. I would suggest not doing that unless you have a clear communication back and forth on what that deliverable is. Value-based pricing, so price based on the value or outcome that you create for your client, not your time, right? As professionals, that one is hard for me, because if I can save a client a ton of money next year, they value that, right? So you can charge for that. And that works a lot for strategic work or high return on investment deliverables, meaning if they invest it, they get a lot of money back because they invested it in your services. And then a retainer or recurring revenue model, so they pay a fixed amount monthly for ongoing access and services. And that works for like ongoing support and maintenance and or advising. And sometimes when you're looking at it in a service business, all of this seems to apply at some point in time. And it is okay to mix and match them. It's just, hey, is this a great time to charge hourly? Is this a great time to have a retainer with this client? What if you sell products instead of services? So cost plus pricing is a pretty standard, no matter what you look over there on the pricing strategies, cost plus is basically how everybody gets their pricing together. So that's your direct cost, your indirect cost, and then your desired profit margin for that product. Your direct cost, again, are your cost of goods sold from before. So even in retail space, you may have to buy that item. That would be the cost of the item. The indirect cost is a little bit trickier when you go to retail space, because that is the overhead cost that's narrowed all the way down to that one unit. So like Becca's store has hundreds of different products in it, and to figure out exactly what that overhead is on each little bitty item may be a little bit more difficult than somebody who sells one pair of shoes to everybody that walks in the door. They're going to be able to narrow that down. So having an understanding of what those overhead costs are will help to make sure that we're pricing correctly. And then a desired profit margin. So here are a couple of different examples of profit margins. Some places, if they're handmade goods or small batch goods, 30 to 50% is fine. Wholesale, you might charge 50% or 100% of your costs to somebody. And then 20 to 40% if you're reselling or doing retail products. Those are just averages of desired products. Profit margins, you may decide to double it, you may decide to half it. It's your business, right? Product pricing strategy is so Keystone is standard retail. That is getting something in, times it by 2, putting it on the shelf, right? That's an easy one. We've all kind of heard that's how stores work. And then you go to Hobby Lobby and they have a 75% off sale and you're like, how are they making money? That is really good though for traditional retail products and resellers. MSRP, manufacturer's suggested retail price. So that's production cost times 4 or 5. That gives you a retail price. That's best for people who do both wholesale and retail. You don't see a ton of that in a lot of retail spaces locally, unless you are going to Sheeler to buy a car. They're gonna mark up their production costs a little bit because they've got a lot of overhead to cover. And then value-based pricing, premium, and artisan work. So what the market will bear to pay based on the perceived value. If I sold art in Becca's store, it would probably be free. But some people can sell art for a couple $100 for a piece of art, right? It's all perceived on what it is. Now, if you all really want stick figures, you let me know after. We'll get you some stick figures to hang around your house. But that value-based pricing is best for handmade, artisan, and limited edition items. So some things though with value-based pricing, and that kind of goes back to the service side and the product side, is I will just charge what it costs me and maybe a little bit extra, right? That's not a really good place to be there. Or I will see what other people charge and I'll just go a little bit lower so I can capture that. Might not be the right way to do it. But nobody's going to pay that much. Well, maybe we have the wrong customers that we're working with. And then on the product side, free shipping is not free. I don't know if you've ever shipped anything, but it always costs me money when I go to mail a check, right, in the mail. So when I go to put a piece of art in the mail, that's going to cost money, right? So you got to think about that in those overhead and indirect costs when you're looking at things. Evaluating your current pricing. So a quick health check on this is, does my pricing cover all my costs and my profits? So minimum hourly rate is your annual operating expenses, your desired profit, your salary, and then divided by billable hours per year. This is service-based a little bit here. So just an example, if I have $50,000 of overhead, I want to make about $20,000 to reinvest in my business, and I'm going to pull out $60,000 a year. I add that all up, and then honestly, if I'm being super, super honest with myself, that magical 2,080 hours in a year, if I was to work 40 hours a week for 52 weeks a year, I'm not going to actually work billable hours for 40 hours a week. That would be insane for me. So I've got about 1,200 billable hours towards my customers. So it might look like $108 an hour minimum is what I have to charge for my billable hours, right? If your calculated minimum is below the hours for professional services that you could get somewhere else, that's a red flag, okay? Either your expenses are too high or you're not accounting for all of your cost. So if you were looking at this and you went through your minimum hourly rate and you saw that for $15 an hour, that's your minimum, we might want to look at your business, deep dive into it a little bit. Because I don't know that all of your expenses are listed out. And if you have a business where you can charge $108 an hour, but it only is costing you 15, I might want to partner with you. Or at least learn a little bit from you, because I could learn from you there too. Am I pricing for the business that I want? When you started, maybe $50 an hour sounded like a really good, hourly rate to charge. But then 3 years in, you're like, I've learned a lot, I've done a lot, and I'm not making any more money. That might be a sign that we need to look at pricing. Signs of outgrowing your pricing. We'll talk about that in just a second, because that's huge. And what does my pricing signal to my market, right? Are we the budget option? Do we want to be the budget option? There is a space in the world for budget options, 100%. Am I mid-market? Am I about average of what it costs? Or am I premium? Because I am truly premium, right? You have to think about those things in your business. Market research without the overwhelm. So how do we do this? How do we research it? Direct research. Look on a competitor's website, right? I am really great at calling other people's businesses and pretending like I have something that I want to know. And then I get them to quote me something. And then I go back to the business I'm working with and I'm like, you're actually doing pretty good, right? Get some good friends. Call me. I'll call for you. Like, if you're not comfortable calling yourself, right? Get some of that understanding. Some of the direct research and I see it a lot now in like photography spaces even, or in website development and things like that. They're putting them straight on their website. I charge this much for this event. I charge this much for this service. I charge this much for this product. Some of it's out there. You just have to look at it. Join industry like Facebook or networking groups. I recently joined Alignable. Didn't really think I would like it very much, but some of the networking groups that are on there, they spit out things about business consultants, and I'm like, oh, I didn't think about that. They're charging this for this service. That's way higher than what I am. Or, hey, they're getting a lot of service, but they're way lower than me, and that's not something that I want to do, so I'm okay with my high pricing. And then ask colleagues too in non-industry or non-competitive markets. Like if there's enough work in the space for me and Alan to do the same thing, and Alan is killing it in his business and I'm over here sweating bullets every end of the month when it comes to pay payroll, have the conversation with Alan. Be collaborative instead of always competitive. Test pricing with new clients. That's my favorite one to do, right? If you have a client base and you feel like, hey, it's time to up my prices, test it on the new client, right? Test higher pricing on the next 3 proposals. If you get them all, I'm going to tell you didn't raise your prices high enough, right? Track throughout the time your acceptance rate. If everybody says yes immediately, again, go higher. If everybody says no, you may be too high, or you may not be communicating your value well. So it's not necessarily that you just jumped way too high. And then the conversation approach. Ask current clients, especially ones who, we all have them, clients who then become friends, who then become people that you talk to about business because they might be in business themselves. If you were hiring somebody like me, what would you expect to pay? Or are you just budgeting me in now because you like me? Or are you looking to spend less money? Are you looking to spend more money? A lot of people are going to tell you, especially if they're other business owners. And then networking events, conversation approach networking events. I'm not saying at the next chamber business after hours walking up to Robert and being like, so why do you charge this much for what you do? And why do you charge this much, Kristen, for what you do? But to have an understanding of like, hey, I'm paying this much for this service. Is this something that everybody is seeing? We do it with our personal bills, right? When that electric bill comes out and everybody sees an increase, you're like, oh my gosh, my electric bill was $600 this month. And then at dinner with your friends, they're like, yeah, mine was $450. It's never been this high. Do that with some of the business costs too, with other business owners. There's nothing wrong with it. The one thing I will say when you are doing your market research is do not just get the price that is out there and undercharge it just a little bit, right? We do not want to race to the bottom. You are going to have clients who value your quality and your price and want to work with you. And I think that that is a big thing to remember when you're looking at pricing. When is it time to raise prices? If you haven't raised your prices in 2 or more years, especially the last 2 years, think about inflation. That'll make you raise your prices. If you are at capacity and you're turning away work, now this is service-based mainly here. If you are at capacity and you are turning away work, people want to work with you, charge a little bit higher, right? You've added certifications, experience, or capabilities. Maybe you have a business and you brought somebody on that does something a little bit different than you do, or they have experience there. You can start charging for those services too. Your costs have increased. That kind of goes with the top one. When I was at the factory, every 3 months, Velcro sent out a cost adjustment. It was never down. But we were locked in contracts with our customers. So we couldn't necessarily give them that increase right off, but we had those markers in our contracts to say, hey, this is when we can take a look at what our costs are. And the last thing is you're attracting clients who haggle you or do not value your work. I will pick on someone in the room, but I was in their shop one day and someone came in and they said, well, I can buy that on Amazon for cheaper. Well, they're not working with a local business who is going to custom create something for them and put it together. Because when you ordered it from Amazon, you had to do the work yourself, right? That might not.
There more than once.
I think they did come back while I was there.
Do it then.
Exactly.
That's when it tests a professional boundary. Like, how good are you at keeping your cool with your clients? But like attracting customers who haggle you, if you realize, hey, they're haggling me all the time, they're looking at that budget option, right? They're thinking that you're the budget option, and that may not be where you want to be.
I had that today at the thrift store. Your prices are too high. I'm like, sorry.
Yeah, that's crazy. So how and when, now it's on the when part, right? When to do it and how to do it right. So for existing clients, give them notice. Do not just send them a bill for more money, right? Do not go in, like, and I'll pick on Becca, and I can, but with Becca, like, if she has somebody who comes in every year to get gifts framed, or if she has clients who come and get one specific thing done all the time, she might say, hey, just want to let you know, November and December we're going to charge this, but in January I've got to make some adjustments for my cost. If you give them a heads up, they're probably not going to care. Or if they did, they were probably looking somewhere else anyway, right? For new clients, just charge it. Just charge the new rate. Don't apologize about it. Don't over-explain it, right? They're coming to your business. They have no clue what's going on in your business. They haven't worked with you before. Be confident in just putting it out there. And then, either way, when clients ask why you're more expensive than other people, be confident in saying this. But I know I'm not the cheapest options, and that's intentional. My clients hire me because I custom make that frame for your diploma. And yes, you can get it for $40 on Amazon, but you're going to have to do it yourself. And then if you mess it up, you got to get it reprinted. And I can do that for cheaper than all of that if you mess it up. My clients hire me because they know that I will do the job right the first time. They know that I'm going to get in there and I'm going to provide that service. And if it's not right, I'm going to come back and fix it. My competitors may not be able to say that. So know why people hire you or what sets you apart. Building your pricing strategy. So the framework a little bit. So calculate that minimum viable rate, right? That cost and profit from earlier. Choose your pricing model based on your market expectations, the type of work you do, and where you're at in your business. And then test and adjust it, right? Step 3 happens all the time. It happens all the time. Start somewhere, you raise your prices, that works out. We got confidence in it. We might want to move it up some more. We'll track how that works. We'll track how much sales we've got, right? We might need to adjust it again. Maybe we need to go down a little bit lower. We didn't attract the customers that we wanted. Package it well is another thing. So one of the things that I've ran into lately is people are wanting like a good, better, best option, and that may be something that you all see in the consulting industry is they want like a baseline, like they want to work with you, but they're not quite sure how they're going to fit it in their budget. They want a midline. They want you in there working and helping them, or they want you to like save it, right? They want you to do a lot. They want you heavy-handed. Tier that out for them in a proposal. Put that together. Robert sent me something the other day on life insurance, and he sent me 2 different options that were an easy option that I can be like, yeah, that's no brainer. And then there was one that was a little bit more expensive. It was like, but what's best for my family? And it made me think, right? If you do package things up and you're in a service-based industry, I would say like name them. They don't have to be catchy names, but name out your packages. Call them by their package names when you're talking to your customers, because what happens is your customers start to identify that as their service that they're getting, not just the individual things that are in that package. And then focus on the outcomes, not just the activities when you're doing it. Pricing red flags. You haven't raised your prices in several years. You're fully booked and you aren't able to pay your bills. You're struggling a little bit, even though you're fully booked. Your clients regularly question your rates or ask for discounts. Your prices are significantly lower than competitors, or you feel resentful about the work that you're doing for the amount of money that you're doing it. Okay. Whether you adjust your pricing or you keep it the same, let's talk about how to review that, what actually happened too, so you can plan better for next year. Real talk. How many of you all have looked at your full expense report for the past year? Robert, that's because he's in finance.
Mine's in a spreadsheet, so it just continues.
And how many of you have had a moment where you've looked at an expense and you saw a charge and you thought, I'm still paying for that? We're all guilty of kind of going sometimes on a financial autopilot, right? You get to a point, especially with this auto pay stuff. 20 years ago, you still had to get online. You had to put your credit card in. You had to send a check in the mail. Now it's got auto pay. Sure, I'll do that. And you're like, yeah, that sounds great to begin with. And then again, we're back to that subscription. 6 months in, we're paying for something we've used twice. The end of the year review is not about shame. So when you're looking at those things, think about that. It's about getting real so you can get strategic. Why this isn't just busy work. So some people, when you talk about business with them, they're like, well, all you want me to do is sit down and look at a report. And I don't want to look at reports all the time. I want to go and do what I do. I want to go be out there. It's not just busy work, because you need this for tax preparation. Okay, that might help you find deductions that you've not taken before. You might be like, hey, I've got to organize some things. I'm not very organized. I need it to get together. It might be that you and your accountant decide it's time to make a strategic purchase before the end of the year, right? Or you and your tax accountant might be able to estimate what you owe or get back, so there's no surprises there. Pattern recognition is huge. So you can see seasonal trends in your income and expenses. You can identify months that might have been great, might not have been very good, or services or products that may be great, may not be great. Understanding that cash flow cycle better, and then spot problems before they become a major problem. And then strategic planning. You can't plan for 2026 without knowing what happened this year or last year, right? You can make a good guess, right? And maybe that's the best we've got. We got a good guess for next year. But then in 2026, when we're following it a little bit more closely, we can make educated guesses, better educated guesses for 2027. Historical data on that strategic planning is very, very helpful on future needs. And then finding money also to allocate towards growth. So a checklist for year-end review, you're going to see this come back in a little bit. Gather your data, categorize and organize, analyze your patterns, and prep for taxes. Back to those nasty expenses that I love, because I love to be able to be like, hey, you can save money if you cut that off. Zombie expenses, the ones that never die, they're just hanging out in the background, you don't use them. How to find them, sort through your expenses, look at your credit card statement, look at your bank statement. Look for annual renewals that hit you once a year that you don't think about because, hey, it was $99 last year, but this year they hit me with a $4.99 charge instead of $99. That's mostly, you see those zombie expenses in subscriptions, software, marketing tools, professional memberships that you might not engage with, or like a stock photo description or subscription if you're doing a lot of websites and things. Death by 1,000 cuts. So those are individual purchases that are small, right? But just like in our personal life, those little swipes when you go through the drive-thru all the time, that kind of adds up, right? At the end of the month, you're like, oh my gosh, I spent this much at McDonald's this month. We have those in business too. Office supplies from Amazon, that's mine. That's my death by 1,000 cuts. I love that it can get there next day because I live in Reiner where no one comes out there the next day, but Amazon does now, right? Coffee shop meetings. I am not saying don't go to a coffee shop meeting because I love a coffee shop meeting, but if you're meeting at a coffee shop like 3 or 4 times a week, are we meeting because we want coffee or are we meeting because we're actually there for business? Quick software purchases or an add-on to something, $12 here, $5 here. The other one there on death by 1,000 cuts that sometimes get business owners are bank fees and ATM fees. You know, you're going to go pay for a service, but they want cash. My bank's in Blacksburg. I'm coming through Christiansburg. I just swing through an ATM and I get hit by a $3.50 fee. Well, if that happens several times in a month, that adds up quickly, right? $15 expenses about 3 times a week at, say, about 50 weeks a year. That's over $2,250 in just the little bitty things. Overspending in the wrong area. So this is one that death by 1,000 cuts, we just have to be cognizant about it when we're working day to day to kind of eliminate those. Zombie expenses, we're going to turn them off. They're done, right, until we sign up for the next one. But overspending in the wrong area is a place that I would almost say everybody in here could make an adjustment on. So good intentions, bad allocations. We saw earlier that they were spending a lot on those office supplies, but they weren't spending a lot in marketing. So taking some of that money and flipping it and putting it over into the marketing budget, right? Tell your office admin, please don't let me order this. Make sure you send it to me before you send it. Whatever that looks like. But spending disproportionately in low impact categories while underfunding the high impact categories. Think about how much of the whole expenses that you have, what that percentage is on those expenses. And you may be like, hey, I don't need to spend 25% of my budget on office supplies. I need to be spending that on marketing. And then a phantom ROI. This one's going to be a little bit trickier if you aren't doing a lot of marketing follow-up in your business, but money spent on things that were supposed to grow the business but didn't, right? Something like an online course that you bought but you never finished. A marketing campaign that may not have worked the way that you wanted to. You wanted to help a buddy out, so you sponsored a race for them and you spent $250 and you didn't get a single client, or you got one client that maybe paid you $50, right? You still didn't get all that money back. Networking group memberships where you weren't getting clients from. I can tell you that the chamber right here is where I get 90% of my clients from. It's amazing. I will pay for this one 100% of the time. But there's other places, like if I was to have to pay for Alignable in those networking groups, while I'm getting information out of them, I'm not going to pay for them. I'm going to use the free version all day, every day. So when we identify the expense problems, we can find investment opportunities and think about where we should be spending more money. I also like to spend more money when I look at those expenses. So find marketing that actually works. Don't spend on random things. If you're looking at what's marketing and you can identify things that are working, double down on it. Put a little bit more money into it. Expand it a little bit. if referrals are your best source, invest in a referral system. Maybe that's a gift card if they give you a referral. Maybe that is at the end of the year you have a customer appreciation and they can bring the referral with them. Content marketing if it works. Hire help, get better tools. If content marketing works for you, that is wonderful. I would almost imagine though that you probably aren't the ones doing all of your content marketing, right? If you're on TikTok all day, then you're probably not using that billable hours, right? Time-saving systems and help, and this is where don't throw pens at me, but things like bookkeeping services, virtual admins for admin tasks, automation tools that truly do save you time, and then templates, standard processes and procedures, systems. Investing in those systems, that will help. Skills that increase your value. So if you have certifications in your industry that allow you to charge more, go for that. Coaching or consulting that helps you and your business sell better. I'm not just saying that for me. I worked with a CEO coaching firm in my last job, and they literally pushed us. We would think we were on a good track this year, and they would be like, well, what about this? Why can't you do it this way? And so it would just have us reframe our thoughts and push more. Training on skills adjacent to your core services. If I am Becca and I am working at a frame shop in a gift space in retail, I am not going to spend money investing in a movie making certification. It doesn't benefit her business. You can, just probably not the best thing to do. Alan, on the other hand, that might be right up his jam. He might come up with some new technology or see some new technology he can get certified in, and that may work for his business. Client experience improvements. So anything that helps with communication, anything that makes things look a little bit more professional, onboarding experiences that can help reduce questions, and then just systems that when they work with you, they're like, this is why I work with them. Not, it's confusing every time they come here and I don't know what we're doing. So instead of asking, can I afford this? Ask, what is the cost of not doing it? You don't have to do this alone. This is not a plug for my business, but I will talk to you if you'd like to talk to me. But when in doubt, reach out. So a tax professional, they're going to help you maximize your deductions and stay compliant. A bookkeeper can help keep things clean and understand the numbers, or be there for quick questions, right? You may not need a CPA right off the bat, but you may need to understand what that report looks like. A bookkeeper likely can help you. Business coach for strategy, accountability, and growth. You're stuck. You don't know how to get past that revenue plateau that you're on. Reach out to somebody. And then an attorney or a legal team, that is to protect your business. So if you are going to set up an entity, you are creating contracts, legal concerns, down to an employee handbook. I'm working with an attorney now on a client's employee handbook. Just having everything to make sure you're covered that you could be sued against later. To have that up front is always helpful. And then when in doubt, reach out rules. So if you have Googled 3 times how to do something, reach out to somebody, because you're probably spending more time figuring out Google and looking at all of the different resources that Google has than it would for them to be able to get you something pretty quickly. If it costs you time, money, or sleep is a very, very, very important one here. If you are losing sleep over something, reach out to a professional to help you. It may not be that they sell you their service. They may just have something that's like, oh, well, that really made sense to me. And then preventative maintenance is cheaper than an emergency repair. That is not just in your equipment and your tools. That is also in your business. If you know a little bit of help along the way is going to help you, an accountant who helps you with your books or a bookkeeper who helps you with your books is going to be a lot cheaper monthly than if you drop them in December 31st, a really nasty year. That you have no idea what to do. Their rates start just climbing. So this is that same case study as before with a little bit of modifications. So you'll see here that $12,000 in office supplies. We have said next year we're going to drop that to $3,000. We're going to cut Morgan's access to Amazon. The software and subscriptions, we found those zombie subscriptions. It's going from $8,000 to $6,000. I'm going to reinvest some of that money into marketing. My professional development is going to stay the same. I've got some extra money, so I'm going to get some extra admin support. and the things that I am not great at. Insurance is going to stay about the same. Our other operating expenses lower just a little bit because, hey, we found some things that just weren't working. And then best part about it is our owner compensation went up here. It is the exact same amount that we were spending. And I'm making more, and I am recategorizing my thinking. Probably could do a lot better just by taking my Amazon away for the office supplies. So a year-end review action plan. So by December 15th, everybody should know, like be able to pull some financial reports. We should be able to see, hey, are those expenses like categorized correctly? Knowing what our top 5 expense categories are. All of us in here should be able to find some zombie expenses. I put 3. We probably all have 3. If you can't find them in business, look on your personal card. And then calculate what you're spending on marketing versus your operations. I am not a marketing professional, but I will tell you that is one of the most underspent categories in almost every client's books that I've worked on. They're not spending money on marketing. And then they're like, I'm not getting any business coming through. And then by December 31st, you want to meet with your tax preparer. Might be good to take a list of them, especially on these like zombie expenses or those top 5 expenses, and say, hey, I want to stop spending here, but I want to spend it here. Does that make smart tax sense to do so? And then have your numbers ready to build your budget, right? You can have that by the end of the year. So building your budget. We've looked backwards. We found all the problems. Now we're going to look where most people get stuck. How many of you have ever created a business budget? Keep your hand up if you actually stuck to it for 3 months, other than Robert. I know why Robert sticks to his budget. It's not Robert, we'll say that. So most of us put our hands down there, and the reason that budgets fail is they're either too rigid, they're too complicated, or they are so far from reality, it's like a dream in their heads, right? And I think that's a lot of the times why people don't even want to create one, because they're like, I don't even know what to put down, right? A budget that's based on your business with some flexibility and that helps guide decisions is not a straitjacket, right? It's guiding us. It's a plan. A budget is not a prediction of what is exactly going to happen. I can say that I'm going to bring in $150,000 worth of revenue, but if I sit on my behind every day on the couch and scroll my phone, I'm probably not going to make that in the business that I run. A rigid rule that can never be broken. So if you are looking at your budget as if I can't break this ever, probably not the right budget. And it is not a tool to shame yourself when reality differs. Things happen. We all make mistakes, right? We overspend somewhere. We have an unexpected expense. We have a breakdown. That is not to shame you into, oh my gosh, I've now got to do something, but my budget won't let me, so now I'm just going to have to shut the doors. It's never meant for that. And it is never something that you set in January and you don't look at again, right? I have seen business owners do this. They have this budget and they get to the end of the year and we're like comparing things and they're like, man, I was way off. I'm like, how did you not know you were way off? You've had this whole thing all year round. What a budget actually is a spending plan based on your priorities. So helping you know those priorities. It's a decision-making tool, an early warning system if things go off track, right? And it's a living document just as that you can adjust as you learn. I absolutely loved it because I help a travel softball team fundraise. And my favorite business thing that was told to me this year was, it's not in my budget. Right? I would really love to help, but it's not my budget. I'm not mad at that business, right? I would love to have extra money for that team, but I'm not mad at them because they are sticking to their budget. And you know what? They also told me, if you want to go ahead and get me some costs and things, I'll look and see if I can add it to my budget next year. Better, right? If we took that mindset and applied it, hey, I can't help right now, but I'll look at it later. When we do this year-end review, that might be something that, hey, I really wanted to help this cause or that cause. I really wanted to help with this. Let's change that budget. So it starts with real numbers. Use your actuals as your baseline. Okay. This is looking at your revenue for 2025. Make note of your best months and your worst months and average it all out, because you may decide I am going to not use my best month revenue all year long, right? I'm not going to times that by 12. That would be a very woo budget, right? Your sales team's going to have to really work. And if you are a solopreneur, that means you're really going to have to work. The worst month is also not something that you should build your budget on, right? But you should be cognizant of it. If your worst month is severely behind your best month, you might want to take that average and look at it a little bit, right? So that average month is where typically people work, but no, when we go to the next step, we're probably going to break it down even further. And then our total expenses. So I love to use a P&L of my business from the year before to create my budget, right? That beautiful chart of accounts that is in your system, that it organizes everything for you and it makes it really nice and neat. Utilize those tools and help that with the expenses here and what categories you already are categorizing things in. The next thing will be to identify your fixed and variable cost. So the fixed costs, again, are the same every month. Your insurance, your software, your planned salaries, your rent or mortgage, your loan payments. Your variable costs are going to fluctuate, right? Your subcontractors, your marketing campaigns, this is where that comes back in. Supplies, processing fees, or if you have to travel to do work, or if you have equipment, those fees that come with that. Your fixed costs are what keep the lights on, right? And your variable costs are the ones that'll kind of get you. You got to make sure you got enough for both. And then the final one is calculating that monthly break even. So just reminding yourself of, this is my bare minimum that I have to make to keep the business running. And I'm going to need to go a little bit above that to cover all my costs. So this is that again, when we put in the P&L, right, we made some, that was the exact P&L from before. We come over here in our case study, we've made some adjustments, right? And then here's our budget, right? Notice what I did here though. Our margins are different. If we are spending more, our goal is if we spend some more, we're going to be making some more, right? So we went from a 20% margin or 19% margin to 22% just by making those budget changes that we talked about earlier. So by lowering, even with that higher compensation, we lowered those office supplies, we increased our marketing, our other admin expense dropped a little bit, right? So it was the same operating expense of $101,500, but by coming up here with more money based off of our redirection of our funds, we've then made more profit. We've made more profit. Budget tips. So I'm going to tell you to use one or use all of them. But the last one, if you're only going to do one, you got to do that one. Break down your budget by month and think about the seasonal ebbs and flows of your business. So don't just look at, dividing everything by 12. And then when January hits and everybody's at home because it snowed a lot, then Becca's like, why in the world didn't I make any money? Well, everybody was stuck at home. They can't come out and shop because it snowed all the time. Know those things about your business. And or if you are like me and you want to travel in the fall, I'm probably not going to put the same sales goal in fall for my revenue, right? And my expenses will probably lower because I won't be on Amazon. Another tip to use is like an 80-20 budget rule. So lock into flexibility here. So lock in like 80% of your budget to the categories that you know that you're going to spend on, and then keep some flexibility out. That helps with some opportunities and adjustments. If this is your very first budget, I'm going to tell you to ignore this rule until you understand your budget a little bit better. But if you've known how to deal with the budget, even if it's a personal budget, then I would say it's okay to do that. But if it's your very first budget ever, ignore the 80-20, because then you're going to get into the way too of the flexible part. And if you only are going to do one thing, monitor your budget and make changes as necessary. So this is a company that I work with, and you will see that at the end, their net income, not great, in January, February, March, flips around April, May, June, July, August, September, and then not great again October, November, December. It's a seasonal business, right? It's okay to see this. It's not wonderful to see it, but it's okay to see that every now and then, as long as this portion keeps this positive, right? Now, with this client, I talked to them about several different things that they were doing. Maybe it's just looking for a new vendor, right? Their COGS, they're fairly proportionate to what their revenue is. But then, they wanted a brand new vehicle. And so we budgeted for that $850. They kind of decided that their car was just fine the way it was. What they were using for their business was working. Then for office and administrative, you'll see like in the summer months, it gets a little bit more expensive. They've got some things that just add up then. And then marketing, they're only spending $500 a month the whole way through. That's their goal, is $500. And then other operating, you can see that kind of fluctuates. One of the things that this company is really big on is each quarter they want to give back. So they're giving, and then they are giving here around the holidays. But that's something that they built into what their mindset was. So just knowing that's what they like to do. It's theirs, right? It's their budget. So 5 monthly questions to think about. What was my revenue last month versus what I budgeted? What were my actual expenses versus what I budgeted? Were there any surprises? Am I on track to hit my goals? And what adjustments do I need to make this month? Do I need to cut back? Do I need to invest more? Or do I need to shift money for the remainder of the year to another category? Look deeper at your budget if you have no idea what your break-even number is. If you're regularly dipping into personal funds to cover your business expenses, look at your budget. If you've got more than 3 surprise expenses a quarter, look at your budget, and we should definitely make a change to make sure we've got those in there, because 3 a quarter is once a month. We got a big surprise. That's not good. If your operating expenses are above 60 to 70% of your revenue, not including your COGS or your salary, or you're making decisions based on your bank account balance. That's a big one. Pitfalls to avoid. I'm just going to try to spend less. Setting a revenue goal and not having an idea of how you're going to achieve it, right? So we upped our goal on that company, but then we also made some adjustments on marketing and things. If you are just going to say, I'm just going to sell more, then that's going to be hard to do without a plan. Forget to pay yourself properly or skip paying yourself to keep your business afloat. Budgeting like every month is an average, making it so complicated you never want to look at it again. You see that this one is very, very simple. There's a lot of flexibility with each of these categories, right? So like marketing, it's not $500 set to a specific thing in marketing. It's just $500 in marketing. Treat the company budget like it's a prison sentence, right? Sometimes it is, especially if you have an ops manager, right, Brian? When they're coming in and they're like, hey, I really want to spend this. And you're like, well, you got to make some more money before you can spend that, right? Sometimes it is a prison sentence, but don't look at it when you're going into it as a prison sentence, right? Look at it as ways to make smart decisions. Do specific dollar amounts, do revenue goals with plans. Owner compensation is included in the budget. You won't believe how many people just don't put it in there. I'll just take what's left over. Monthly variations with seasonal patterns, simple tracking, and flexibility. So the action plan, homework time. Within a month, you should be able to create a budget for your business. Okay, week 1, if you kind of like track it out this way, pull the financial reports, look at them, spend an hour or so on them. I'm not asking you to spend 40 hours looking at your financial reports, but just look at them. Week 2, zone in and look at your pricing. Take a look at it. Week 3 is kind of looking at that year-end review. All of the things. I'm going to give you a checklist of some year-end things that may also bring some things to light And then week 4 is like drafting a budget. You don't have to turn your homework into me. It's all solely to you, but having that budget in a month is obtainable, right? This is the checklist that you are going to get, as well as a quarterly and a monthly checklist. And then for clients that work directly with me, they end up even with a weekly and a daily. We customize them for your business. But these are very overall categories like business and finance planning, production, business relationships, marketing, and all of that. So you all will get those today. Does anybody have questions? And don't worry, there are no silly questions. This is all of my fam, and we like to travel, and so I always find alpacas. But we love to take the silly photos. So is there any questions that anybody has?
So when it comes to like, so we have the month where it's our like my licensing, renewal, education, all that stuff, most expensive month. And the way we budget it out is we budget it through the year. Do you suggest doing that, or just knowing like, hey, this is the expensive month?
It depends on how you are in your budget. So for somebody like you, I'm going to say it's okay to have that hard hit month, right? You also are going to put some money back and not be like, when it gets to it, be like, oh my gosh, where is this money? I'm supposed to pay for this. Now, somebody who's growing in their business may need to have, if they know they have some yearly expenses, they may need to have a savings account to drop that back to. That's again where it's not necessarily a one size fits all solution. I need a savings account sometimes because I like to shop on Amazon. So I know all of my expenses are taken care of. I do that personally too. I have a bill card and a fun money card. My bills are taken care of, and I can spend whatever's on my fun money card. Right? So if you have to have something like that for a business, then do that. Make it work for you. Just make the budget so you know how it's going to work for you.
What did COGS stand for again?
Cost of goods sold. So that's anything that it costs to get that sale.
How do you break that down? So I know mine's specific for a service-based industry, but when you looked at some of the subscriptions and things which are like, hey, this could not happen without them, is that operating cost? Is that cost of goods sold?
It depends on what it is, and I know that's not the answer that you wanted to hear. But if it's something that you're using for every service, then I would say that it goes to operating expenses and not COGS. If it's something that you're using for a specific service and you could run your business without that service, without that subscription, then I would leave it in COGS. Does that help?
I mean, it's
Clear
still
as
where I think
mud,
you're
right?
supposed to be.
Yeah. And sometimes you'll see, like, even accountants do it sometimes. One year they'll run it up in COGS, and the next year they'll drop it to operating. And then they're like, oh, I didn't really like that, so I'm going to put it up here at COGS. And so they make changes too. Again, it's not set in stone, especially when it comes to they've budgeted for it in that overhead. But then they're finding out it cost them way more or less to move them around. The big one that you see in any business is labor that you pay. Service base, your labor is going to be cost of goods sold for people doing the work, right? That is going to be, anybody who's doing the work for you is going to be cost of goods sold. That's an hourly employee. My salary team, no, they're an operating expense. Anything else? Any other questions? So I really appreciate you guys coming out today for engaging with the material. I know that looking at numbers sometimes, I love it. That's what I do for a living. You all are probably like, I don't want to do that ever again. It's not everybody's favorite thing, but you showed up. I hope that you got something out of it. And I want you to remember, you don't have to be a numbers person. You don't have to do it perfect. It is a learning experience as business is, right? And you don't have to do it alone. You will get a copy of those checklists in your email as a PDF, but there also are copies if you want to grab one and look at it, mark it up. I've got copies of my business card right there. If you want to send me a quick email to make sure that you receive the checklist and any other end of year check-ins that I do with just like my general client base. It's not necessarily something specific to you. Send me an email and make sure you include the name of your business. You can send me a funny picture. Who knows, it might pop up in a slideshow if you say it's okay. And then if you are still overwhelmed, you aren't sure where to start, and you are responsible for helping with your budget, scan that QR code and it'll take you to the contact form on my website, which will help you request a discovery meeting, and we'll get something set up. But my contact information is there. So thank you guys for coming.
Even though you write the checks for the chamber, so you know. So thank you for that. Thanks to y'all for being here. Like I said, we're getting ready to turn over for 2026, so there's nothing in particular but build Invest for Success into your budget for next year, and go ahead and meet with Marissa so you can do that, so you can see sponsorships and other things here, as well as how your membership needs to factor into your budget. Because that way Morgan gets the checks. So thank you all for being here, and we'll see you next time.
So thank you all.